Hi, listeners. This is Rahul Gupta, CEO of Avanti Finance.
The Indian government has been on the mission to improve financial inclusion for decades now. In the past, by policy changes and mandates to banks, which today is done through an ecosystem and technology approach. One of the largest financial inclusion startups in India is Avanti Finance, which is an initiative of Ratan, Tata, and Nandan Nilekani. In this episode, your host Akshay Dutt talks to Rahul Gupta, the CEO of Avanti Finance, about building a fintech for financial inclusion for the next 100 million households. Rahul shares his learnings from his long experience inside GE and the fundamental principles of scaling up a lending business focused on the unbanked and the underbanked. Stay tuned and subscribe to the Founder Thesis podcast on any audio streaming platform to learn about building businesses for the bottom of the pyramid.
I grew up in small town Shimla. So I grew up there along with my mum and two older brothers. I lost my dad when I was very young. Sadly, passed away at a very young age when he was at the height of his profession. But my mother then took on the mantle of bringing up three young boys. And she did a few entrepreneurial things. So I did my bachelor's in commerce from DAV College, Chandigarh. And very shortly after that, I started my career with an office automation company called Network, where I started my career selling electronic typewriters. So I was a field sales executive and spent about 9 months there, good training, and then was very fortunate to be selected into Modi Xerox, which was definitely amongst the best sales organizations in India at that time. And lessons I learned there at a very early stage of my life have helped me right throughout. So at that point of time, we were selling photocopying machines. And at a very young age, I got the opportunity to get exposed to selling in retail, institutional, and government sector, and really understanding the different sales cycles and how to manage multiple stakeholders and deal with pressure, because it was a high reward but high pressure organization.
How long was that stint?
So that was about 2.5 years in Delhi. I thoroughly enjoyed it. And then there was an interesting opportunity that came about in the form of American Express, which was expanding its business in India and was going to launch the Indian rupee card for one, and also expand what they had was the corporate card. That time, mainly the big draw was that you could use it internationally under some liberalized guidelines from the Reserve Bank. And given that they were targeting a very marquee audience, they wanted a proprietary sales team. And the interview process was quite grueling, had to meet different people. But more importantly, what they had done is they had made the package very attractive at that point of time. And 30 or 40,000 people who applied for some 12 or 13 positions, and those who got it. But I think they were out of the 12 or 13 people they hired, 7 or 8 were from Modi Xerox. So that also spoke about training that we all got in that organization.
Which year did you join Amex?
I joined Amex in 92. I joined as part of the cards team based out of Bombay. Had a lot of fun meeting some industry stalwarts because I had to go and sell the card to them directly, but more importantly, share the value proposition of the card to them. G Capital had been set up in India recently, and they were making a foray with very ambitious plans on the retail finance side through an organization called Countrywide at that point of time. Initially, it was a joint venture of G Capital and HDFC, and then G Capital ran it by themselves. So I was amongst the first 27 or 28 people who joined that organization, which was a whole lot of fun. Most of what I have learned in consumer financing happened then, and subsequently in the years that, or the 2 decades that I served that organization in India, Singapore, Hong Kong, and then back in Singapore.
This was a credit card business that GE set up?
No, actually the credit card business came later, which was in the joint venture with State Bank of India. But what we actually started off on the consumer financing side was financing of consumer durables. So G leveraged a lot of its know-how in mature markets, creating white label or private label partnerships with known brands. So the end product was like more like an embedded finance product as we call it today. And the industry was very, very fragmented at that point of time. So if you were buying a color television and you wanted financing on it, it was basically whatever means the local dealer had. But here we partnered with the OEMs to provide a very nationwide standard offering, which was the modus operandi which GE had built across. So we created a pretty large business and then started with consumer durables, and then it went into different asset classes like computers and air conditions, two-wheelers, cars. We were one of the two organizations which had a captive vehicle finance organization with Maruti, which was the leader by far at that. So that was an organization called Maruti Countrywide. We were amongst the largest sort of players in the industry on the consumer finance side. So I did that for about 6 years in different cities in India, roles of increasing responsibility. Then I took a sabbatical. I had a very interesting opportunity that came my way to work for a telecom company, a mobile telephony company in Eastern Europe. So took that risk. It was my wife, myself, and our daughter, who was about 3 years old. So we were quite excited about the chance to go overseas and live in Eastern Europe. And it was a wonderful assignment, work with some great people, completely different industry, different environment. And 2 years later, for personal reasons, we wanted to come back to India. And G was very gracious to offer me a very good role back as the chief marketing officer and said, welcome back home. So great to be back with people I'd worked for a long time. And then from then until I joined Avanti in 2018, I was with GE. When I came back from Eastern Europe, a couple of years in India and then a few years in Singapore. Then I was running our business in Hong Kong.
What kind of roles? Like you were heading sales?
So I went to head marketing in Singapore, but then we merged sales and marketing. So I took over. Then I got promoted and went as a pretty young CEO to Hong Kong. Spent a very interesting 3 years in Hong Kong, also navigating the global financial crisis and then dealing with the changes that G wanted to make to its portfolio, really winding down capital and growing its other businesses. Then I came back to Singapore, which is a business that I'd helped to build. We grew it further and then we monetized it by selling it to a bank. After that, I moved into a corporate role for about 6 years, where I was the head of business development and strategy as a managing director for what we call G's Global Growth Organization. So I managed the ASEAN region, which was when a few of us had joined, the region was about 2 billion in annual revenues. And then as the businesses grew, we were about 5 billion in revenue. And I did that till the end of 2017, when I thought it was time to take a pause from G was going through its own inflection point. And I thought this is the time for me to now finally look outside. And then Avanti happened, which was great.
A lot of people blame GE's downfall on its diversification into the financial business. Would you characterize that as fair, or would you disagree with that?
See, what happened was unfortunate. And clearly part of it was G's own doing. So I think there were a couple of reasons, in my opinion. Now, in the financial services business, I think a wholesale business, that proved to be a big issue, especially which got exacerbated by the fact that the GFC happened.
Okay, you'll need to break this down for outsiders. What do you mean by wholesale finance?
Really, G was a non-banking finance company. So it wasn't a bank. And at one point of time, it was the largest non-banking finance company in the world with a balance sheet of 800 billion of assets and larger than many banks as well. And when you really are relying on wholesale funding and not retail deposits, as banks have, that was what sort of caused the challenge, especially, as I mentioned, catalyzed by what happened with the external environment. Personally, for me, there were some amazing experiences there. One was managing through the crisis. And you only do these things when you have a great team with you. And G always has great people. Well, not only competent, but it had a culture of having each other's back. And then monetizing a few businesses for G by selling those businesses with the intent that the businesses that we have built, the strong franchise that we had created, finds a good home for the people and what one had created for your end users and our customer segment. And which then, after we sold off the Singapore business, which I was running, I got an opportunity to move into the global growth organization role as the business development and head for all our industrial businesses for ASEAN region. And that was amazing because it was only because of the support that one had and what I'd done in G that I got that role. I didn't know much about industrial businesses, but that was fascinating because there was a very steep learning curve. But I really enjoyed it because in the first 15 years, I was very focused on the financial part of business, which I was part of. And then I got to learn a lot about our other businesses, such as healthcare, power, aviation, oil and gas, all of which were extremely fascinating.
Who bought GE's India business on the capital side?
So we had, you asked that question on credit card. So credit card was actually, so it went to SBI. And then you have that business has some institutional investors such as Carlyle, etc. So that was the core credit card business. And then we had some parts of the consumer finance business was then sold to Apollo along with two other senior leaders from which, and that entity today is currently known as Clicks Capital. So Avanti journey, March 2018, I was in India for two reasons. One, to spend quality time with friends and family, since I had left G end of December and I was figuring out and exploring my next gig.
And where were you based out of?
I was based out of Singapore. And in all probability, I was going to land up doing something in private equity. And I used that time also to suss out the scene in India because I always wanted, I'd been in Singapore at that time for about 14 years. I'd been overseas for about maybe 17 years or something like that. And for me, it was coming back to India was always the path, but it was never a question of if, it was always a question of when. And while I was here, I was meeting different people. I was quite amazed at the progress that India had made, especially on what it was doing on the fintech side, the technology side, and how far it had gone. And during that time, I caught up with a very leading search firm, which spoke to me about Avanti and said a couple of luminaries like Mr. Tata and Nandan Nilekani are getting together to solve for financial inclusion at population scale. Would you be interested? And I said, listen, it sounds very fascinating, but obviously I'd like to learn more about it. And that led to a series of conversations with the founders and other board members. And at each stage, I got more and more convinced that this is what I wanted to do. So the process took its own time in terms of meeting different folks and for me to deliberate and for them to get together. But at each stage, it was a better conversation than the last one, where my clarity in terms of what the vision was became better and better. And I was quite convinced that should I get this opportunity, I would consider it a privilege and I would take it. So that happened. And then I moved here by myself in early October 2018. So it's a little over 4 years.
At the time when these conversations were happening and you were getting interviewed, Avanti was already an operational business or it was at the idea stage?
No, it was beyond an idea. So the NBFC and NBFC MFI license that we had happened. The design of Avanti, the vision, mission had been spelt out, and a core team of about 4 or 5 people had been assembled by the board. So I was fortunate that a lot of that had happened when I came. So I came into a leadership team which was very capable, and it's the same leadership team till today, and very mission aligned, and the vision and mission had been clearly stated, but it was absolute kind of otherwise startup phase. And there were just a bunch of us. And yeah, it's been an amazing journey since then.
What was the gap that Avanti wanted to fix?
Avanti wants to fix the gap of 100 million households, which are either unserved totally or underserved by formal financial services. And which basically means that 400 or 500 million people in India are excluded from the formal financial system. And that creates a big issue that these people never get an appropriate opportunity to usher in economic prosperity into their lives.
Financial services here is credit or other things also like
Credit has been, we identify, has been our first intervention. It is one of those things because everybody at the base of the pyramid, the small ticket loans or income generation loans, that has to be fulfilled first. But our goal is not to be a mono product company, but also we want to build scale. We want to become good at what we're doing. But the idea is once we do that in our playbook, we will do other forms of products such as partner with others to have fit for purpose insurance products, savings products, really in the spirit of being a neobank for the un and underserved population of the country.
yeah, India already has the Microfinance Institute ecosystem, which serves, say, a population outside of, like, beyond the SECAB category population. What was the gap? Why were these people not served?
Let's take a step back. Microfinance institutions since about 2010 and so the last 10, 12 years have done a fabulous job of going to the last mile customers, which earlier the banks and other financial institutions had not been able to do. But despite all of that, there are still 100 million households which are unserved or underserved. So when that was the problem statement, and when our founders got together, it was fairly evident to them that this gap has to be solved by a very reimagined model, which is going to be very agile, adopting and integrating with all the new technologies of India's stack and India's digital public infrastructure that has been created, which is leading the world, really. We're not following anyone there. We are leading the way there. It was with an audacious vision like that, it was always very clear that you can't be a proprietary balance sheet lender. So you have to get multiple pools of capital to come through from different forms of financial institution, which will fuel the credit output to the target segment. And lastly, to be frictionless and scalable, you had to solve for the conundrum of doing this digitally, but to a population which may not be digitally savvy. And that's what we try to solve for every day. And we have some very interesting use cases around it. And that, to reiterate, that's why it's a platform. And it's not just another business where you create brick and mortar as your way of reaching customers. Then you employ lots of people in the branches and around that to lend and collect and administer. And then your scalability also is largely dependent on how much money you can raise on your balance sheet. So here the idea was start with your own balance sheet to build a proof of concept. After that, try and unlock all the capital that is available to go to either priority sector lending or the last mile customers and channel it through Avanti's role as a program manager, which can leverage community organizations to source, design, right products for our customers and aggregate capital across different financial institutions. So on one side, you're reaching the customers, you're solving for them with fit for purpose products through a channel which is not brick and mortar, but other organizations which could be ag tech players or players with whom we have embedded finance programs or other MFIs, etc., who may not have the capital needed to build scalable programs, but definitely have the local knowledge and connect with customers to do so. And then you have capital providers on one side, such as the large banks and other financial institutions, where that money flows through our digital spine. So very different, reimagined model.
There must be a reason why this 100 million population has been unserved. For example, not enough data to underwrite them. The axiom in the lending industry is that it's easy to give money, it's hard to take it back, like collecting. So the challenges in collecting money from this or 100 million household audience. Like, so what was the way that you thought about these problems and how you would solve them?
Yeah, so let's look at it from a customer point of view. Why are they unserved or underserved? One, as you said, is the envisaged risk around them, that they are data dark. So how do you underwrite that? So if you look at our customer base, about 30% of our customers are absolutely new to credit, which means the first time they have ever borrowed from a formal financial organization is Avanti. So what does that do? It helps them build a digital financial footprint. And if they build, by virtue of this, if they build a good financial score, it's going to empower them in the future and open up more avenues for them to borrow for their needs. But how do we underwrite them, right? If they're not part of any formal bureau scores, etc. Now, which is where these local partnerships that we have, where these our originating partners are very well entrenched into the community, they give us what we call a social trust signal, saying, here are your loan, let's say you're giving a 50,000 rupee loan to this person, is going to be used for this income generating activity. So disposable income will grow significantly, hopefully, after they repay you as well. So they're going to live. So one, it's going to have an impact. And because you're helping them generate more income and live better, their motivation to repay you is also that much higher. So it's actually a big risk mitigant. But to do this, actually, you need risk capital. These are hypotheses that we have, right? And that's where we put the risk capital to play to say, okay, let's go and test it. And we are very happy that it's working very well. And people at the base of the pyramid have very honorable intentions to always pay you back. Challenge sometimes is that they always end up taking some knocks or the other in their livelihoods. So you have to be patient enough to understand that delayed payments does not mean write-offs. So if people are delayed sometime because their livelihoods have generally suffered, as was evident during COVID, then just have that patience to ride the storm with them, because largely what we see in this segment is at a consumer level, there are very few bad actors. So one is, how do you underwrite customers who are data dark using social trust signals and leveraging the power of existing communities, which is why we decided to go through this partnership model rather than establish our own brick and mortar. So that's one difference. The second difference is building products which are fit for purpose. Now, if you give a farmer a loan and they are going to monetize their crop, let's say every 3 months, but you ask that farmer to repay every week, it doesn't make sense. Now, how do you build products where the repayments are also linked to the income streams? And that we've built a very agile platform which allows for repayments or moratoriums literally according to what the customers want. So if the customers want to repay daily, weekly, fortnightly, monthly, quarterly bullet payments, we built for all of that. If a customer is in the business of, let's say, dairy, and they take a loan for cattle, but the yield is only going to happen in 3 months later, and therefore they need a moratorium for the first 3 months, then that is something that we built the technology layers and ability to do that as well. So that's really solving for customers, taking into account the hyper-local nuances of product development, because sitting in Bangalore or Bombay, we are not going to know what people in different parts of India and remote parts of India. The third is the constant capital that you need. And which is why for us, we've not restricted ourselves just by being a balance sheet lender. We've done that to prove a concept, to show our skin in the game. But going forward, we lend off on our balance sheet. We'll do co-lending with other financial institutions. And we already have some other use cases where there is some very purpose-led lending that we have done during COVID, etc., where global foundations have given us subsidized debt to tailor programs to help rehabilitate people whose livelihood suffered during the pandemic.
And let me just zoom into all three of these. So your first point was that you go to market with partners instead of building your own distribution. So this was there from day one. You wanted to go through partners?
Yeah, we have 3 operating principles: that we should be paperless, presenceless, and cashless. And I'll expound on each one of them. Paperless means that all the information should be captured on an Avanti app, which is filled out by our partners, agents on the ground. So it's an assisted mode because our end user may not even have a smartphone. Right? So they're assisted in filling the details, but all the validations, verifications, information capture is all done paperless. It's all done on the app. The second leg is the presenceless part, where we don't have a single branch. So today we are operating in 22 states and 250 districts of India, which is roughly a third of India's districts, without a single branch of ours. And our whole logic or thought process behind it was you already have existing players or emerging players who are totally intertwined with our customer segment. So we have to use that ability to reach our customers. And the last is our North Star, which is cashless. That's a tough one. So from a ecosystem perspective, India is evolving rapidly. From giving our customers the tools to repay digitally, integration with banks, the different payment gateways, etc. We have done all of that, but there are social challenges of people being comfortable paying digitally or savvy enough. So that's a small percentage of the overall repayments that we get. But we feel that's rapidly going to change in the next few years. And that will be a game changer because imagine a world where 100% of our customers are paying digitally. So the cost of collections comes down, the velocity of cash comes down, which reduces cost of credit, less instances of fraud, etc. So the customer will be the biggest beneficiary in terms of reduced rates and higher empowerment.
Who are the partners that you went to market with? Give me some examples. And what are the kind of people that you're lending to? What's your target demographic?
So let me answer the second part first. So about 90% of our borrowers are women. Of course, they may be taking a loan for a purpose which they are jointly doing some form of income generation with their spouses. Almost about 50% or so of our customers are smallholder farmers. Then you have other forms of customers who are in some form of agri or agri-allied activities. Could be dairy, poultry, piggery, goatry, etc. And then there will be about 25-30% of our customers who are really the micro MSMEs with small shops, vegetable vendors, so on and so forth, where their 1K loan really is basic working capital for them. The kind of partners we have, other financial institutions such as the smaller MFIs, etc., which understand the basic principles of lending and collecting and customer service, may have very deep-rooted relationships with their customer base, but don't have big balance sheets to lend. So they become business correspondents of ours. There are ag tech players where we are building out some very interesting embedded finance programs. So these could be, so on the first category of players, we have organizations such as Samita in Madhya Pradesh. On the ag tech side, we have, or on the embedded finance side, we have people like Stel Apps. And we have a bunch of farmer producer organizations or collectives to whom we lend, either directly to them or through them to the end farmers. And there's one more category, which is what we call as social partners, which could be not-for-profit organizations for whom financial inclusion is part of their charter, such as organizations like Seva. And all put together, these are the ones which have given us a fairly robust nationwide presence, as I mentioned, in about 22 states.
Is there an incentive for them? Do they also earn when you disburse funds? And do you disburse funds to a group like an MFI or is it to individuals?
Yeah, so we disburse directly to the individuals. So our belief is that as the identity layer has got established in India, as everybody has a bank account, that need of creating these joint lending groups is going to become lesser and lesser. So looking at building a sort of future-driven model, we lend directly individuals. Of course, may do some activities in a group kind of construct just for productivity purposes, which is getting people together to onboard them or collect from them, etc. So that's a little bit on who do we lend to. There was another question, another part of the question, Akshay, which
incentive.
Yeah, so the incentive is different ranges and forms of incentive. So if you look at, for example, another MFI partner, the incentives would be sharing of the percentage of the interest we get because they have their own cost of people, branches, etc. So they need to cover the cost and make some profit on that. So that will determine the percentage of yield share. In some of the embedded finance products, what we pay them might be just enough to cover their cost because the Avanti Finance is allowing them to sell their core product.
The embedded finance means like a BNPL, buy now, pay later, which helps them to increase their sales.
Yeah, BNPL is more of a sort of direct to consumer product. In our case, it could be if there is an ag tech player which is picking up produce from farmers and aggregating it to, let's say, sell it to the big grocery stores in a metro. Now, in order to couldn't have that high velocity cycles of pick up, produce, pay the farmers, pick up and repeat, that's where Avanti comes on in terms of providing that short-term working capital, because that's not the core business of, let's say, the tech player. That's just one example, and there are many other such use cases. And then in the social partner category, what we say, a lot of them have been doing in partnership with other organizations, providing loans for people for income generation. That's what we do. For them, again, it's more a question of capturing, of making sure that the costs are covered, less about it being a profit driver. So there are different sort of ranges and motivations of incentives.
Okay, got it. What is your NPA rate?
So our rate is sub 2%, which is well below what we target.
That's amazing. I think very few lending fintechs have a sub 2% NPA rate. Help me understand the business model here. What is your cost of money? What is the interest rate that you earn from that? And from that, what is the overheads and what is the margin that you're left with?
Yeah, so let me paint pricing waterfall for you here. So let's just look at the different levels. So firstly is our cost of capital. So our cost of capital typically will be, look at our borrowings, will be in the 12 to 13% range as an early stage company. We're BBB plus rated, but we've been punching above our weight here and getting funds at almost AA minus sort of rates. But then you have to add on the cost of losses, the cost of operations. For us, the big investment we're making upfront is technology. Now, platforms typically, the investment in technology upfront in the beginning is a little disproportionate to the size of your business, but that is the biggest edge as you go forward, because once your platform mature and the productivity comes in, your transaction costs can start trending to very small numbers. So that's the patient capital and the strategic capital you need to put in. So we have cost of capital, we have cost of investment largely in technology. You have to budget for losses, you have to budget for operation costs, and then you have to budget for the payouts that you give to your partners. And these payouts can be quite different. So depending on who is your sourcing partner, as I explained earlier, the different most people have, that determines how you pay out. And depending on that, you will determine your final lending rate to the end borrower as well, depending on which channel it was sourced.
The rate would differ based on who's sourcing the deal for you. That cost will get passed on to the borrowers.
Correct. And if it's a MFI which has costs attributed to real estate people, etc., then you have to cover that cost. If it is an embedded finance player, the motivations are different. So that's how it works.
But what is the average rate at which you lend out?
We typically, rates could be anything between the retail level, could be anything between 19% to 24%, which is typically in line with what the industry in India is doing, largely because the cost of capital itself is 12-13%.
So could you give me like a journey year by year? 2018, Avanti started, like a year by year breakdown to where you are now. Like what was your year one go to market and how many loans did you give out, or what was the dispersal and something like that, if you could take me through?
I may not remember exact numbers year by year, but I'll definitely share the journey with you. So 2018 was the year where we went to market to test out a proof of concept in terms of building out a digital delivery model for the base of the pyramid. So we spent 2018 bringing the technology into the field, and we had relationships with about 3 or 4 partners across 5 or 6 states. And we spent that year really understanding, and this was most of it happened actually in the last 4 or 5 months of the year. And we spent our time understanding the implementation of our technology in assisted mode via our partners. So firstly, how comfortable the partners were, the adoption of technology in an assisted mode by our customers, and a lot of time in terms of insights gained from customers and partners as to what's working and what the gaps are. And we started building out a team. By early 2019, we were beginning to grow quite well.
What kind of monthly disbursement? Or
yeah, so we were at that point of time beginning to do at least a few crores a month, but with an opportunity to leapfrog that by 3 times, 4 times very quickly. And then what happened is that as we were growing, so we were seed funded. And then we started saying, okay, the first one.
By Mr. Tata and Mr. Nilekani.
Yeah, so we were seed funded by Mr. Tata and Mr. Nilekani. And then 2019 is the first year we went and took an external loan for on lending. And then we said, okay, we're getting a lot of confidence in terms of our business model. And maybe we should start looking at a Series A and what would it take to do a Series A. And so we spoke to a lot of potential investors in terms of our business model, why we were confident about it, yet it was untested. And we were in very nascent stage. And there wasn't much to show in terms of proof points, except some early successful pilots. And as we were sort of, with the debt that we had, etc., as we started growing, and then COVID happened. So we are in many ways a COVID baby. And that's the point, that's the time in 2020, which was a difficult year, where new revenues were not being generated because our Series A had got stalled and the money, and anyway, there was a moratorium on repayments. So money is not coming back, new monies are not flowing out. So we went through that. But our founders were very clear that use this time to come out stronger. Be very sensitive to your borrowers, understand the pain that they're going through, learn from this stress test, and whatever investment that we need to make it in a manner where we learn from what's happening in COVID, because hopefully not something as severe, but in the base of the pyramid, there are always some instances that happen that knock the wind out of people's sails. So how would you learn to manage your risk and your customer empathy? How do you balance all of this out as you create a platform? So we kept chugging along and we kept investing in our technology through the support of our founders because they had strong belief in what we were doing. And that actually then led to a very eventful year in 2021, where we raised a Series A through some very mission-aligned investors, such as Bill and Melinda Gates Foundation, Oiko Credit, which is a Netherlands-based large impact investment organization, and Nomura Bank, and also some private capital that came from a gentleman in Gujarat who's a technopreneur turned philanthropist, in addition to some repeat funding that was provided to us by our founders. Now that allowed us to grow, and we grew about 3.5 times to a book of about 350 crores or so by the end of March 2022. Our ambitions now are quite big, Akshay, and we are now at a phase where we're looking at getting into breakout growth phase. So having served 200,000 customers for different livelihoods, different use cases across the country, we are now looking at really accelerating and getting to about an AUM of about 2,000 crores, with about 500,000 customers or more served in the next 18 months. This will happen via a few key drivers. One is that the last leg of our platform strategy is coming to life now, where we will embark upon co-lending with some very reputable institutions, which gives us the capital or the access to additional capital to serve our last mile customers, and gives our lenders the ability to reach cohorts that they can't reach themselves, and leverage on the technology we built, the partnership network we've created across the country, and the risk management ability that we have internally. Plus, there is a lot of demand that we have curated, and we have been working very closely with all the partners that we have. So together, we will now get into a very exciting growth phase for the company. And it's not just a growth phase for the company. Every day we come to work, the more customers we serve, it means the more impact we're making in the lives of people we were meant to. So that is what gets us out of bed every morning.
Amazing. What's your current monthly disbursement?
So let's just say that we are now running at a range of about 60, 70 crores, targeting to get to 100, and then the logical step to go from 100 to 200 crores over the next 4 to 6 months.
Like by middle of next year, you'd be disbursing about 200 crores a month.
I would hope so.
Wow. Amazing. Okay. So co-lending that you're speaking of, is this where there's this priority lending requirement? So is it for that helping banks and other organizations to meet that priority lending targets?
I think banks get a couple of advantages. One is the PSL targets. Two is, other than that, they also get access to customers early in their banking cycles. So a lot of these customers will sort of upgrade, and the banks can offer them products for the different life cycle of their needs. But banks can't put branches everywhere. They may not necessarily understand the economics of making money on a 30, 40,000 rupee loan, along with the cost of credit, which has to be managed. So given that we have now invested time and capital on that, we have a very credible story to partner with. And that is what is drawing the great attention of reputed institutions to work with us.
Okay, so the fact that your go-to market is through partner agencies would keep your operational costs pretty low.
Absolutely. Now, just to add to that, so at the amount of business we're disbursing currently, or will disburse, let's say we're about 60 people in an organization, right? So let's say when we start disbursing 100 crores a month, which could be in a month or two, we'll still be 60, 65 people. Now, typically companies in this segment that we are talking about, I'm not talking about urban segment. If you're going to be doing 25,000 loans a month, you have typical brick and mortar financial institutions, MFIs, etc. They may even have 1,000 people and hundreds of branches to do this, but we are extremely lean. So there's a huge difference there.
Do you also attract ESG money? There is this global theme of environment, social governance, and so like that ESG funds for as co-lending partners.
You bring about a very valid point. And in fact, I've just come back from a business trip in Europe where there was big talk about ESG and agri-finance to combat climate risk, gender, various elements of ESG and SDGs. Clearly, what's happening is, if I was to not just straitjacketing ESG, but there's an impact, hopefully will become more mainstream. It's not there yet, but there seem to be some moves which definitely will augur well for the industry and the customers that we're trying to serve. So some of these themes that I spoke to you, there was big discussion around it. And everybody is looking at how are you imbibing that in your business practices as part of your strategy? And do you have a roadmap for it? So I think we're at an early stage of that big ESG roadmap, but we clearly are building towards it because this is reality and we have to play our part.
What's your leverage ratio? What percentage of your assets under management is equity? Like how much is that debt to equity?
So we have a debt to equity currently of roughly about 2.5 times. Yeah. So there is still room to leverage more.
And with co-lending coming in, what could be the ceiling of this number that you could hit? Like by the time you hit your 2000 CR AUM target?
Actually, I won't say it'll actually come down. Because if you look at a co-lending model, then if you're doing 80-20, only 20 is on your balance sheet, 80 is off your balance sheet, right? So you're actually leveraging much more, and then your need for capital comes down. So it becomes a very capital efficient model of growth. Yeah. So your leverages will actually come down.
Like you might be lending as much as say 10 times your equity if you include the total amount lent, not just your balance sheet, but
yeah. So our goal is that at mature stage, maybe in 2.5 years time, or at increased mature stage, almost 60 to 70% of the lending we do or the AUM will be off our balance sheet.
What is a 5-year roadmap for Avanti?
I think in 5 years time, I would say hopefully we would have witnessed the WhatsApp moment of our business, where this whole concept of a digital delivery model to the base of the pyramid being executed in a paperless, presenceless, cashless model would have become quite mature. I would hope by then, in 5 years' time, we would have served at least 20, 30 million customers or more and played a meaningful part in the journey of enabling access to formal financial services to the 100 million who are out of it, because we're not going to do all of this, right? The reason we're creating a platform is other people in the industry can leverage our platform to do so. A big part of us is to be an ecosystem enabler. We hope that by the intervention that we would have digitized credit to a large extent, and we would have also helped people in their overall financial well-being, not just through credit, but through other fee-based products and liability products such as savings, insurance, etc., because all of those are important to create financial empowerment and financial security. Hopefully, we would have very clear metrics on the impact that our financial products would have made in the well-being of our customers. And we should be some form of a digital neobank, which is serving swathes of the population which have been hitherto excluded.
Tell me about building up Avanti as an organization. Like, you are an extremely lean team of just 60 people. So I'm pretty sure that these would have been like highly handpicked, highly mission-driven individuals. Tell me about that journey.
So actually, firstly, I think let's start with the co-founding team. So as I mentioned, the board had handpicked a few very capable folks who were the original co-founding team of Avanti, who are still there, and in fact are co-stewards of the organization. I was fortunate to become part of that team. So we have my colleague Manish Thakkar, who's an ex-investment banker, Lalitesh, who's a global technologist, co-founder of Google in India, the person who built Google Map Maker, on which Google Maps, as we know today, was built. Sunil, who has done very senior roles in consulting, the last of which was with Accenture. And more recently, we had a very, very capable and mission-driven individual, Nagraj, who joined us as a chief risk officer. So it's really the leadership team. And then we have, of course, many more folks in the organization. So I think the leadership team manages the company collectively. Each one of us brings something to the table, and then it's a question of always, some of the parts. So yes, we've been very fortunate to build a very high energy, performance oriented, mission driven team, very young, but very mature in their thinking and in their clarity as to why they want to be part of the Avanti story.
And that brings us to the end of this conversation. I want to ask you for a favor now. Did you like listening to this show? I'd love to hear your feedback about it. Do you have your own startup ideas? I'd love to hear them. Do you have questions for any of the guests that you heard about in this show? I'd love to get your questions and pass them on to the guests. Write to me at ad@thepodium.in. That's ad@thepodium.in.